So, good morning, everybody. My name is Dennis Lin. I am the co-chair of the Young Professionals Committee here at the Chamber of Commerce. I also work for HPM Building Supply as their Community Relations Administrator. I want to welcome you to today's professional development class on applying for a mortgage. We're very happy to have Melanie Caceres here, Senior Loan Officer at HFS Federal Credit Union, joining us today for a presentation on applying for a mortgage. We'll be introducing Melanie later on, but before we go into today's presentation, I'd like to go around the Zoom room and have you guys introduce yourselves, and if you could just name, business, and briefly what you do at the business. So let's go with David.
Hi, you guys. My name is David Lim. I work with Hawaii 5 Stars. We are the franchisee organization for McDonald's on Hawaii Island. And technically owner-operator. My family runs the restaurants, and I'm next gen with running it with my dad and my mom as well. I'm located currently in Kona, but I spend time on all sides of the island. And not a homeowner at the moment, but it's very educational. I think today will be for me, and hopefully, going through the process in the future. So very excited about that. Nice to meet you guys.
Thank you, David. Why don't we move on to Lincoln?
Hey, good morning, everybody. Lincoln Ashida. I'm with Torkelson Cats. I had my camera off because I was so lazy to get my collared shirt that's hanging over there. But normally I try to be a little more presentable, so kalamai on that. I was interested in this because of building some rental units, and I was curious about financing some of them. So thank you for doing this presentation, and thank you for letting me just wear a non-collared shirt today. Thank you.
Oh, good, Lincoln. Thank you. Jessica?
Hi, guys. Oh.
Thanks, Jessica. And Jessica is the marketing coordinator at HFS Federal Credit Union. Kapono, are you able to unmute and give a brief introduction?
Yeah, I hope you can hear me. I'm actually on my cell phone right now. So my name is Kapono Pa. I am a realtor, broker, and broker in charge at Salvio Realty in Pahoa. I joined today because even being a real estate broker for 9 years, I know that I don't know everything that there is to the financing world. So always looking to learn something new.
Thank you, Kapono. Just a friendly reminder to everybody who's on the call, if you could keep your cameras on and stay muted. Any questions you can put in the chat, and we can get that over to Melanie when we do the questions and answers. Briefly, I'll give an introduction to the Young Professionals program here at the Chamber. So the Young Professionals Committee was formed in 2018 as a way for young professionals between the ages of 21 to 39 to talk story, network, learn about different topics that are relevant to their careers in their stage in life, and really to learn about the businesses here at the Chamber as well. And hopefully they can make connections that can help them progress in their careers. These professional development series, we've done quite a few over the past 3-4 years. Really just topics that help everybody learn new things. Maybe you've been thinking about a certain topic, maybe insurance, maybe retirement, maybe a mortgage, buying a home, These are all topics that, you know, you don't learn in school. So we provide these as a educational series for those of you who are in the chamber. And with that, I'll end it there. But the young professionals do meet on the second Thursday of every month. And we are working on doing hybrid meetings via Zoom and in person. So if you're interested, just shoot Taylor and Miles an email, and then we'll get you on the email list for the meetings. All right. With that, I'm happy to introduce Melanie Caceres. Melanie is the Senior Loan Officer at HFS Federal Credit Union in Hilo. She has been with the credit union for over 19 years. She started as a part-time teller while going to college, and once she graduated, she started working full-time and worked her way to becoming Senior Loan Officer. Outside of the office, Melanie is busy with her 3 young children and has found a new hobby of crocheting. Please join me in welcoming Melanie Caceres. Welcome, Melanie.
Thank you, everyone. Thank you for having me on to present this process. I know there's a lot of people interested, but I think the young professionals, that's an amazing group to do these type of things. So thank you. Again, I've been with the credit union for the past 19 years. I love my job. I love helping people. I love the people I work with. So I hope to continue working here. And then I just want to put a disclaimer out there that everything that I go over today is what the credit union requires. So it's HFS Federal Credit Union. These are our requirements. These are our guidelines. So not necessarily will it be across the board with every other lender. Every lender has their own policies and guidelines to follow. So the things that I will go over is just from the credit union standpoint. And because we're a credit union, it's the same for everyone. So we don't have any first-time home buyers programs, all of our interest rates and qualifying guidelines is for every member. It's the same across the board. So it's just for the credit union. And then please, it's an informal presentation. So if you have any questions throughout my presentation, just stop and put in the chat or stop and just ask a question while I'm going through anything, but we can get started. So I'm going to share my screen. Can everyone see? Good to go. Okay. Here we go. And then with the credit union, the majority of our, well, actually all of our mortgages are owner occupancy. Owner occupancy meaning that this is your primary residence. So I know Lincoln was asking about rentals. Right now, our construction programs are for owner occupants, primary residence only. But let's see our agenda today. So we'll go over the types of mortgages that the credit union offers, the required documentation, completing the Uniform Residential Loan Application, or URLA is the short term for it, pulling credit, the application process, ideal rule of thumb, and closing costs. So these are the types of products we currently offer. So we have vacant land loans, we have home purchase, refinances, construction to permanent, and Helocs. Helocs is home equity lines of credit. For the construction loans, we do have, it's a one-time closing cost, so we'll allow you to build, take 12 months to build, and then roll it into a permanent after. The required documents that we required. So the financials, so 2 years, W-2s, 2 years, federal tax returns. We usually request that the tax returns are signed. So your 1040s, because you normally don't sign your copies, but before turning them in, we do request it get signed. 1 month of pay stubs, deposit to cover appraisal. These documents are needed basically because we need to show the ability to repay. So we need to make sure that you qualify based on your financial documents. For the vacant, sorry. Okay. And we usually look for 2 years of employment history. And do I need a down payment? Yeah, so right now the credit union can finance up to 80% on purchases and refinances. One of our vacant land loan products, we can lend up to 90%. So you would have to come up with either 20 or 10% down plus the closing costs. Closing costs can range between 2,000 to 6,000, just depending on where the property is and how big it is. Okay, so completing the application is, I mean, if you come into the office to pick it up, it is quite a lengthy, has several pages. So 9 to 10 if you're applying individually, and up to 17 pages if you're applying jointly. So these are basically the sections on the application. So first of all, section 1, borrower information. It's the general information. So your name, if you're applying for individual, joint credit, your marital status, age of dependents, address, employment information. Again, we're looking for at least 2 years of address and current employment or previous employment information as well. And any other income, if you have a secondary job or extra income, we also look for this in this section. Section 2 is the assets and liabilities. And in this section, basically, you'll just list all your savings, checking, retirement, any type of assets, vehicles that you own, 401ks, and then also list your liabilities. So on the liabilities section, we usually do, even if you have an open credit card, but it has a 0 balance, because it's still open, we usually require that in the liabilities section. And then any other liabilities, if you have to pay alimony, child support, or any other expense, you list there. Section 3 is real estate. So this is any properties that you own. If you're a first-time home buyer, first-time purchasing, you wouldn't fill this section out because there is none owned. But if you do own properties, you would list them here. And then also creditor's name. So if you do have a property that has a loan on it, then you would list it under the creditors, the unpaid balance. If it's a revolving account, the credit limit, and your monthly payments. Okay, section 4, so loan and property info. This is where you would put what you're looking to purchase. If it's a pre-approval and you don't have a property address, you would just list the loan amount that you're looking to get pre-qualified for. If it's a refinance, then you would list the property information here and how much you're looking to borrow. Section 5 is just the declarations, it's yes or no questions that you answer. I know in section 5B, I get asked a lot, are you a cosigner or guarantor on any other debt? So co-signing for other people, even though you don't make a payment, we still, I mean, if you're not making the payment and the other person is paying, we still have to include that debt because it is, you're agreeing to pay on demand should the borrower fail to pay. So co-signing for loans, definitely be careful, because when you try to apply for a mortgage, it will show up on your credit report and we have to include that payment when we look to qualify you. Section 6 is acknowledgments and agreements. So by signing this, you are attesting that everything that you listed in the application is true. You are also allowing us to place interest on the property that you're applying for. And this also authorizes the credit union to pull credit reports once we get a signed and completed application. Section 7 of the application is the military service. So if this applies, you would check whichever box applies to you. Section 8, this here is the demographic information. So just selecting the ethnicity and race that applies. This one here is required by the federal government, and this is to ensure that there is no discrimination based on race or even based on the demographics as far as where the property is located. So required. So after completing the application, it allows us to pull credit reports. So we do a tri-merge credit report, which is all three bureaus. So it's Experian, Equifax, and TransUnion. When we do pull the credit, there is a credit report fee incurred. So right now, an individual single credit report with just one person is about $40. For a joint two people, it's about $65. And with the credit report, another thing I want to mention, we take the middle score. So whatever the mid score is what we use on our approval. And another thing is that we don't have a minimum credit score. So you don't need a minimum credit score to qualify. We don't use that as a primary factor in making a decision for approval. So the application process is first you get a pre-approval. Once you're pre-approved, then we will order a title search and lien check. This checks for any liens on the property as well as the borrowers. So on the lien checks, we not only check when we're checking on the borrower, it's called a UCC, which is a Uniform Commercial Code filing. And this is to ensure that there's no liens on the borrower. So common samples of the UCC, we have, like, if you buy a Kaiser Motorsports, like those UTV, ATVs, we notice that if you apply for credit with them, they place a UCC on the borrower. Another one is Kubota, those big excavator machines. If you finance through them, we also seen UCC liens on them. And another common one is like Sunrun, Tesla, those solar companies. So if you do solar with them, they place a lien. So not necessarily, those UCC liens are on the borrower, not necessarily on the property. However, those liens do have to get cleared, because what happens is if those loans go in default, those liens will take precedence over our mortgage, even if we record our mortgage first. So title search, lien checks, very important, because if it's a first mortgage, there shouldn't be any liens in front of ours. Next step is the appraisal. So we have a list of approved appraisers that we send out. So at that point, we do collect an $800 deposit, which pays for the cost of the appraisal. And then the appraiser contacts the borrower to schedule. So it's not done in-house, it's done through our third-party vendors. Again, our list of appraisals. Once we get the appraisal back, we do a final review just to make sure that there is sufficient value and the condition of the home is good. And then we schedule a closing appointment. This one here is just, how I have a lot of members saying, well, what do we qualify for? This is just an ideal rule of thumb on how to calculate a possible amount that you would qualify for. So our debt to income ratio is 40%. And basically the calculation is that you take your monthly gross income, you times that by 40%, you less any monthly payments that you have. And then that would equal the mortgage payment that you can afford. So for example, I did an example, if your gross income is $3,000, 40% of that is $1,200. Say you have a credit card, the minimum payment is $35 and an auto payment of $200. You subtract that from that $1,200 and that leftover is $965. So $965 is how much you can, afford for your monthly payment. So when I did a calculation, a mortgage of approximately $180,000 would give you a payment of about $965 at our current rate of 30 years. Closing costs. So these are a list of our closing costs incurred. So credit report, again, the individual right now is $40. A joint credit report is $65. Appraisals usually run between 800. It can go over 1,000. Again, depending, it just depends on the size of the parcel and depends on where the parcel is located. Any title or escrow fees that if it's a purchase, there'll be escrow. Also some refinances will have escrow and title fees as well. Flood determination. We don't do flood determination on vacant lands, but for everything else, we do a flood determination. That just checks to make sure if the property is in a flood zone or not. If it is in a flood zone, then we will require flood insurance. Recording, that's the bureau fee. So that just recording is placing a lien on the property. And then the document preparation fee. And then if you are interested in applying, we do have our packets available at any one of our branch locations. So you can stop by and pick it up. And that's pretty much all I have. Does anyone have any questions? Oh, did you?
Thank you, Melanie. Yeah, I see that there was one question from Jessica. Do you recommend home buyers fill out a packet prior to looking for a home?
You know, it totally depends on the buyer, because I have some people that will just do it and bring all their documents. But some people, when they pick up a packet, they're kind of overwhelmed because it is a lot. The application is thick and the information in there can be confusing. So in that case, we have members schedule an appointment to come into one of our offices, and they can actually sit down with one of us and we can actually do the application for them. So it just depends on how comfortable the buyer is as far as filling it out on their own or doing it in office. Right now we have our construction permanent loans available online, and also our home equity line of credits and home equity loans available online. But to purchase and for refinances, those we do require an appointment or a completed packet to get turned in.
Thank you. My question would be, for those who are looking to purchase a home, what's the process to get a pre-approval or a pre-qualification?
So pre-qualification is just basically completing the application and turning it in with the required documents. So for pre-approval, it's the 2 years W-2s, 2 years federal tax returns, and 1 month pay stubs. Once we get those, then we can look to do a pre-approval. And then just on another question, 2 years employment, it does not have to be in the same line of work. And what happens is when we do the application and we get through and we're able to give pre-approval, we actually send verification of employment out. So we send it out to the current employer. And then if less than 2 years, we send out to the previous employer as well. So it does not have to be in the same line of work.
I see that Capono has his hand up. Capono, why don't you go ahead?
Aloha, Melanie. This is Capono with Salvio Realty.
Hi.
For those like myself, independent contractors who don't get W-2s, we get 1099s. Is there any additional things that we need to present?
No, just the 1099s and the 2 years federal tax returns.
Okay.
Yeah.
And then a second question I had was, are the credit unions loans, are those kept, I guess, in-house, or are they later sold
Oh,
to
good
secondary
question.
or
Sorry, I
tertiary
forgot to
markets?
mention. Good one, good one. Yeah, sorry. Right now, we do not sell our mortgages. So they are all kept in-house and serviced in-house.
That's great.
Yeah. I know, because a lot of, I know the bigger banks will, if you're booking it with one bank, next month they sell it to another, and you know, your lender keeps changing. Right now, for the credit union, we carry it all in-house.
Hey, Melanie, in terms of construction loans, what do you recommend that applicants come prepared with? So
So
should they
for
have a permit
construction,
already? Should they have
yeah.
the sign of the home, all that kind of stuff?
Yeah, good one. I didn't want to go into any one specific during my presentation, but yeah, the construction permanent loans, that's a good question. You can get a pre-approval, but I know that the building process is super long. I have a construction loan that I was working on. It was like a year before now we're finally ready to close. But when you do a construction permanent loan, you can get a pre-approval again, like I said, but we do require a copy of your stamped and approved county plans, building permit. And then also, I think we are the only lender that will allow owner builder right now, meaning that the owner is the contractor. However, with the owner builder, we do require bonding. So either through HPM or Hansador, and the bonding just ensures that the job gets done, but we do allow that. So when you do come in, you would want to have at least your plans like went through the county process. And then once you get your building permit, then that would be a good time to apply.
So Jessica has another question in the chat.
Oh, good one, Jess. Yes, got it. So this in here, we don't do the purchase of the land and construction in one loan, as some lenders may do. You have to purchase the land first, and then you can build. So when you purchase the land, for us, we require at least keeping the land, in your name for at least 30 days, because that's usually how long it takes for everything to record and push through. So at least 30 days before you can apply for the construction, but it is two separate application processes.
Sorry, Melanie, just to clarify on that then, could you then apply for a vacant land loan to purchase the property through HFS and then come back and try to roll that into a construction or no?
No, yeah, so you would do the vacant land loan first, and then when you apply for the construction loan, with part of that first draw, we need to pay off the land loan. So it would just be one loan. It wouldn't be two separate loans.
And then the land loan is a minimum 10% down, correct?
So with the vacant land, we have two products. So one is a 3-year interest only. That one there, we can lend up to 90%. So that's the 10% down. That one there, most people will take in the event they plan to build within 3 years. The other vacant land that we have is a 10-year vacant land loan. And that one there is principal and interest payments. We can lend up to 80% on that one.
Well, thank you for mentioning that. Yeah, because just speaking from experience, being a realtor, I did represent a couple of people in the past 2 years, which was really tough for trying to locate vacant land with a construction loan. Because one, you had to find a seller who was willing to wait through the permitting process.
Yes.
I got one buyer, we had one seller who accepted their offer. The county couldn't get the permitting done in time. The seller didn't want to extend, so my buyer actually lost out on the property and a few $1,000s going into those plans and permits.
Yeah, shucks. And we've seen that too. The market right now is just crazy. Real estate is crazy. And vacant land is really hard to come by. A lot of people are doing cash purchases. But yeah, it just depends on that seller. And a lot of times, the seller isn't willing to wait, right? Because they can get a faster closing deal done first, faster than when someone is trying to finance. So yeah, it's just dependent on the seller, but it is a process. Our vacant land loans right now, what has been taking us a while is our third-party vendors because of the market. So appraisals right now taking like about 4 to 6 weeks to complete. So that's our longest process, but yeah, just depending on the seller. So I've seen that situation come through where the sellers don't want to file an extension and that buyer is out. So that's very unfortunate and very sad actually, because a lot of people here who live here, they have no choice but to finance, right? So it's kind of a tough world.
Yeah, and right now they're priced out of buying homes or vacant land. And hopefully with this little bit of a slowdown, prices will start to come down.
Yes.
maybe, hopefully, planning and building will unclog itself with the permitting mess.
Yes, because
things will be easier
yeah.
moving forward.
For sure, for sure. I mean, because even to get it through the county for approval, that's taking months too.
Hey, Melanie, maybe you can you briefly explain what PMI is?
Oh, okay, PMI. We don't offer PMI, but it's private mortgage insurance, and that basically, and I wouldn't say maybe not so much. I mean, the values have increased, but private mortgage insurance is when the property doesn't have enough value. It's that you pay that extra so that you can get financing. But right now, the credit union, we don't do PMI. And another thing that we don't do, which is a little different from other lenders, is that we don't escrow for homeowners insurance and real property taxes. So the mortgage payment that we quote is just for the mortgage, real property tax, homeowners insurance, fire, hurricane, flood, that the member has to pay on their own because we don't include it in the mortgage payment.
For clarification on the PMI, you don't offer it, but would it be required for somebody who's doing less than 20% down?
No. So what happens is if it's less than, I mean, that's the max we can do is 80%. And then the buyer or the member would have to come up with the difference.
I'm sorry, that's right. So that's why you don't have the PMI.
We don't have
play.
PMI.
Usually,
Yeah.
the PMI usually comes into play when you have less than 80% of the value.
Yes. Correct.
Okay, got it.
Correct. Yeah. So the member would have to come up with a difference to make that up.
Right. Any other questions? Oh, explain the difference between pre-qualified and pre-approval.
Oh, pre-qualified, pre-approval, it's the same thing. So you're just applying to see if you qualify for the mortgage or purchase. Yeah, it's used interchangeably.
And timing
I was
wise,
going to add,
how long does the pre-approval process typically take?
So once we get a completed application with all of the financial documents, it's usually 24 to 48 hours on the pre-approval. So pre-approval is fairly fast. It's just the process from open to close that may take a while.
sorry, I was just going to add that from the real estate point of view between buyers and sellers, the difference between the pre-approval and the pre-qualification is that the pre-approval would tell a seller you're a little bit more serious about purchasing the property that they have offered for sale because you took those extra steps to actually get approved for the loan, at least pre-approved. The pre-qualification doesn't take into consideration those additional steps. And so it's viewed a little bit lighter than a pre-approval.
So one from Jessica, once you get pre-approved, how long does it stay open until you have to apply again?
So that can vary. I mean, the credit reports are usually good for 30 to 60 days, but I mean, depending on our members and if they're in communication with us and they're still searching, we usually hold it for a little bit longer. If it's more than 6 months though, we definitely would have to pull another credit report just to update to make sure nothing else changes.
In terms of what Lincoln's trying to do with rental properties, what kind of resources can he get access to build his rental properties?
So that one there, probably
aluminum cans and bottles, bro.
I got one bag for you, Lincoln.
Unfortunately, we don't do investors for building.
Okay, so he would just have to find a different lender that would do the investing loan.
Yeah, that does investor type mortgages.
Uncle Newton.
All right. I did have one last question regarding like you mentioned the liens, right? Checking the liens and whatnot. So if I was to look at like a home equity line of credit or my primary mortgage is with a different lender, Does HFS still do the HELOC, although they're going to be in second position on the?
Yep. Yeah, good question. Good question. So the home equity line of credit, it's a second position lien. So that's fine for you to have your first. We just make sure that there's no other liens besides your first. But yeah, you can do, it would be a second lien position. Or some people don't have a first and they want to do a home equity line of credit because it's a revolving account. That's fine too.
All right. Any other questions?
Yeah, Dennis, this is Capono again. I had one question regarding the ability to buy points or pay down points. Is that an option with the credit union? And could you outline a little bit more of what that entails and then what the cost ratios are?
We actually did away with points. So we don't, there's no origination fee and there's no points. So right now our 30-year first mortgage is 4.9%. And that's we don't charge points. We used to, but yeah, it's been several years that we don't charge points. So it's just a flat rate, 4.95.
Yeah. And what are points?
Well, points is a percentage. Points is a percentage you would pay to buy down your interest rate. So a percentage of what you're looking to borrow, you pay to buy it down. So before there used to be 1 point, 2 points. 2 points was our max. But yeah, we don't require any points. So no, just the 80% financing, so 20% down, or the land 90% with 10% down.
Okay. David, you had a question?
Yeah, do you mind commenting on the different types of loans or different types of mortgages, particularly, I guess, with a first-time home buyer in mind? And also, are there any other considerations for first-time home buyers that we should exercise, or instruments or anything that is advantageous or considerable?
So first time, again, we don't have any specific programs for first-time home buyers because we're a credit union. It's the same across the board, but we do look for at least 2 years of employment and just getting pre-qualified. So it would be, I know a lot of first-time home buyers come in, they either want to purchase land or they want to purchase a home. So those are the only 2 types of products that first-time home buyers are looking for. So land as an investment to build, or a home already done that they want to live in.
As for different types of mortgages and all that, there's different types of interest rates that apply to different mortgages. Should that be considered at all? Is that an option?
The interest rates are the same for everyone. So vacant land, our current 3-year interest only is 3.75. And then the mortgage for the 30 years, 4.95. So the interest rates are the same. It's slowly rising, but currently it's at that. But no incentives. Oh, go ahead.
I thought there's like fixed rate mortgages, adjustable rate.
Yeah, it's
mortgages
fixed. So for us, we don't do any adjustable rates. The only adjustable rate that we do have is our home equity line of credit right now. Everything else is fixed. Yeah, everything else is fixed.
So Melanie, in lines with what David was saying, so if somebody's credit score is really good or their credit report is really good, does that impact their interest rate, or HFS has a flat line interest rate?
Yeah, it's flat. It's same across the board. So it's not, the credit score does not determine the rate. It's not risk-based pricing. So it's the same for everyone, but it doesn't matter if you had good credit, no credit, the interest rate is still going to be the same for the mortgages.
Okay.
And so then the credit union doesn't even delve into things like USDA, FHA, because that's more for like a mortgage broker then, right?
Yeah, currently we don't. We do have a third-party vendor, which is CU Members Mortgage. And if it's linked through our website, but it's not directly through us, so we wouldn't service that. But I know the CU members mortgage through our website does offer the USDA FHA type loans, but in-house we don't. And then just had a question about recommend adjustable or fixed. It just depends on the buyer themselves on what they prefer. I know a lot of people are very hesitant with the adjustable rates just because we've seen what happened in the past. So yeah, it's just depending on the comfort of the buyer.
Regarding the vacant land loan, is there any requirement at the end of the term of that loan for construction to happen on the property, or could somebody use a vacant land loan solely for the purposes of buying vacant land to sit on, as long as they pay the loan off?
Yeah, they could. The vacant land loan, as long as it's on grid, meaning that you can hook up to Heloc or public electric, we can do it. If it's off grid, we don't do loans on off grid. Another thing to mention is that right now we don't do in Lava Zone 1. We can do in Lava Zone 2 if they're able to get homeowners insurance. But as far as building, so another thing is for our vacant land loan. So once you do a vacant land loan and you intend to build, I have a lot of people, I tell them to make sure that they don't do anything to the property, whether it be clearing, putting up a fence, starting the foundation, because once you start doing something to the property, it prevents us from lending because our title companies won't insure it because of mechanic liens or possible mechanic liens, which means that any work done to the property, if it's not paid for, those people can place a mechanics liens, which would come before the mortgage. So I had a couple where they started to build a stone wall, and we were right about ready to, or we ordered the appraisal, I believe, and on there, it was noted that there was a stone wall built. So we had to do a lot of legwork with the title company just so that they would okay for us to do the loan. Because if the title company won't insure, then we wouldn't be able to complete the loan process. Make sense?
Yeah, so one, you got to be in an area that's accessible to Hawaiian Electric,
Yes.
public power.
Yes.
And you can't have any improvements on the property.
Yes, nor delivery of materials, or even like an excavator. We saw one with an excavator on there, and the title company wasn't willing to insure.
Okay. And then you mentioned lava zones for the vacant land. I'm assuming that also applies to home loans. You don't do one,
correct.
but you can
Correct.
do two if insurance is available.
Correct, yes.
Cool.
And is there a resource for those who are looking at Lava Zone 2 where it cuts off?
Your realtor.
Yeah, your realtor should know. Your realtor should know. They
Okay.
usually have the maps out.
All right. Any other questions? I know we kind of covered a whole bunch of different topics all at once, Melanie, but I think it shows that there's a lot of interest in, you know, the mortgage process, and there's still a lot of information that people don't know and are
Yeah.
interested in knowing more.
Yeah.
But at this time, I want to thank you, Melanie, for your time. Thank you,
Thank you for
HFS,
having me.
for providing this opportunity for you to present. For those of you on the call, if you have specific topics that you would like to see on this professional development series, please let us know. Send an email to Taylor and Miles or myself, and we'll try to get a presenter. Or if you would like to present yourself, let us know. And that's all I have for this presentation. Thank you, everybody. And if
Thank
you want
you,
to stay on
everyone.
to tell the story, feel free. Thank you.
Thank you.
Thank you.
Thank you, Melanie.
Thank you.